Hello, welcome to European Open Briefing for Friday, September 28th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be having a look at what's happening in the currency markets today. The US dollar continues to extend its post-Fed meeting gains. It earlier hit a 9-month high against the Japanese yen. It's currently trading just off those highs at 113.40. The dollar index is also up this morning by around 0.2%. So the greenback got a boost yesterday from hawkish remarks by Fed Chair Jerome Powell, who on the one hand is concerned over US recession. That gave a major boost to risk appetite. We saw US stocks closing higher overnight and Asian stocks also ending the session earlier today in positive territory. But the Powell once again reiterated the need for further gradual rate increases, so that further gave the dollar a big boost, and that gave downside pressure to other major pairs, particularly the euro, but also sterling and the Australian dollar. Sterling is slightly weaker this morning, extending its losses at around 1.3060. The Aussie, though, has now moved into positive territory, trading at 0.7216 against the US dollar. The euro, though, yesterday was one of the worst performers. It came after Italy's government announced a much bigger than expected budget deficit target for the 2019 deficit. That led to a big spike in Italian government bond yields, and there are now renewed concerns about Italy's debt burden, as well as the Italy possibly heading to collision course with the EU. The loonie was the exception yesterday, being the only major currency ending the day higher against the US dollar. It's currently trading at around 1.3011 to the US dollar. So the loonie got a boost from hawkish remarks by Bank of Canada's Governor Stephen Poloz, who raised expectations that the BOC will raise interest rates at the October policy meeting. Looking at commodities, we can see oil prices continue to make gains, but gold is struggling yesterday. Gold tumbled to a 6-week low. It's currently trading slightly higher, just below the $1,183 level. Looking at the major performance this morning, oil is the biggest gainer, followed by the dollar index. The loonie is also another big gainer this morning, making the USD CAD pair the worst performer, followed by euro dollar. Let's now take a closer look at the dollar yen pair. We can see it nearly touched a 9-month peak of 113.63. This comes despite the fact that US Treasury yields haven't really been able to make fresh highs after the Fed meeting. The yields did rise to fresh multi-month highs at the start of the week. Nevertheless, the US dollar is now looking much more bullish than it was at the end of last week. So Fed Chair, speaking again yesterday, said that there's no reason to think that the probability of recession in the next year or two is at all elevated. There has been some fears among market traders that the US economy could be headed to recession due to the declining yield spread between long and short-term Treasury yields. But the Fed apparently doesn't appear to be too concerned about this. We also had more solid data out of the US. We had durable goods orders beating expectations, as well as GDP growth for the second quarter being confirmed at 4.2%. Looking at the euro now, we can see there's been a significant pullback from that 3.5 months high of $1.1815 earlier in the week. It's now fallen to a 2-week low 1.1612 against the US dollar. So Italy's government has finally announced its deficit target for 2019 for the budget after a bit of a delay yesterday. That target is 2.4% of GDP, much higher than what the finance minister wanted, which was closer to around 1.6%. The deficit has already come under attack by the EU's Economic Affairs Commissioner, who urged Italy to cut their explosive debt levels. So this is something which could escalate in the coming weeks. For now, the euro is extending its gains this morning and is very close to breaching the $1.16 level. Taking a look now at the Canadian dollar, it had fallen yesterday to a two-week low 1.3081 to the US dollar, mainly on the back of negative developments in the NAFTA renegotiation. But there's been some more positive remarks this morning. Canadian Prime Minister Justin Trudeau said that Canada has no plans to withdraw from the talks despite that setback this week and strong criticism by President Trump, who isn't happy with Canada's negotiators. But apart from that, we had comments by Stephen Poloz late yesterday saying that the bank will continue to follow a gradual approach to raising interest rates. So this makes a rate hike at the October policy meeting pretty much certain. And once again, Poloz also reiterated that a possible trade war with the US would not necessarily lead to a rate cut. So that gave the loonie a bit of a boost, which has firmed to around 1.3015 against its US counterpart. It's going to be a busy day in terms of economic data for the rest of the day. We're going to have UK GDP revisions, followed by the flash inflation numbers for September out of the Eurozone, as well as personal spending and income out of the US, plus the core PCE price index. That's it from me. Thank you very much for watching and have a great day.